opportunity to state your name. Let us know where you're calling in from. Please let us know where you're calling in from and state your name. All right, I'll give you that like 10 seconds. If you just joined, to state your name, let us know where you're calling in from. All right, fantastic. So we're going to dive right in here, folks. It is my absolute pleasure and honor to host you this evening. But most importantly, be able to present to you an individual that I have a tremendous amount of respect for. I mean, absolutely amazing, dynamic, has 100% of what it takes to be completely and totally effective when it comes to executing trades, is making a great deal of money, loves, knows how to have a lot of fun, and loves helping people. So without any further ado, I'm going to turn the call over to my esteemed business partner, hailing all the way from the wonderful city of Jacksonville, Florida. I mean, just an amazing individual, master's degree, retired as a United States major from the United States Army. And here's what you really understand. You really want to allow her to help you tonight. She's also a Series 6 license in 63. So what does that mean? She's a financial advisor, and she's your business partner. So you want to definitely tap into her business mind. And without any further ado, I'm going to turn the call over to none other than our fearless coach and mentor for this evening, Miss Tasha M. Dyer. Miss Dyer, are you on the line?
Yes, I am. And thank you so much, Mr. Rogers. Wonderful, wonderful introduction. But I just want to thank you for being a visionary, because you had a vision, because of what you saw. That's why we're here. And that's what we're here today for. And so I just want to thank you. And ladies and gentlemen, you're plugged into this call. You're here because you accepted the challenge. You accepted the challenge to be your own bank. So we're here to show you and to help you. Like he said, this is a study hall. That's what this is. And so it's about learning the tools, helping the tools to help put you in a position of profit. So enroll, learn, and then you're going to be trading. So we're using the tools. And so tonight, what I want to do is we're going to dive into this web analyzer. We're going to talk about this web analyzer. And now the strategy that I am going to cover tonight is not built into the web analyzer. So understand that there is a little work that you have to do on your end. I'm going to say that up front, because it's not built into the web analyzer, but it works perfectly with the web analyzer. So this is a strategy that we're calling the BYOB Cashout. Be your own bank. Because what we're consistently doing and what we want to do is make sure that when you get enrolled, and while you're learning the academy, while you're learning your skill set, while you're learning the tools, that you can be in profit. You can learn to trade. You can be trading and be in profit while you're still learning the market, while you're still learning the big picture, while you're still learning to navigate through the market. And that's what this call is about tonight, because we want to collapse those time frames that put you in profit. So let me share my screen with you. I'm going to share my screen. Now, what you see, let's pulling up. So be your own bank. Now, this is the BYOB cash out. Like I say, the be your own bank cash out. And that's because 10 pips and you cashing out. So what I've analyzed this on, and what we've done is analyze this. This has been analyzed on the 15-minute chart. So this is something that I just started trading. This is something that I just started doing, and I've tested it. I've been in the market with it. And I can tell you that when I've done this, I've been in profit. So I'm excited, and I'm excited to share this with you tonight. So, it's the 15-minute chart. Now, yes, it will work, but on other time frames, but tonight we're focusing on the 15-minute chart. Now, what I'm discussing and what I'm talking about and work with me on the name, but it's the Hikinashi candles. It's a Japanese name, but it's an indicator. That's what it is. So there are different time frames. You've seen me use the lines. You've seen me pull up other different things on there, but this is the Hikinashi candles, and those are the candles that are there with the drop down. So I'm going to show you, and we're going to actually pull them up, but I want to just show you and talk you through exactly what it is. But what they do is they help you identify market trends. So it's useful for short-term trend trading. So there, like I said, it's useful to identify market trends. So if the market's moving in an uptrend, if the market is moving in a downtrend, this is definitely something that you want to be able to utilize. This is something that you are going to be able to see. And it helps identify those trends. And how does it do that? Because it removes the clutter of the market. So when you look at the candles, when you typically look at the market and you look at the candles, you see a lot of shifting. You see a lot of up, down, wicks. And that is accurate because you have the market movers and you have the buys, you have the sells. So people are consistently in and out of the market. They're buying, they're selling, different time frames. So that is what you see. You see every movement when you see a candle. So what this does is it takes those averages and it calculates it from the candles. So it uses the opening, the closing, the highs and the lows, but you don't have to calculate that. It does it for you. Okay. But understanding what it does is important. I believe it's important for you to understand what it's doing so you understand why you're using it. So it removes that clutter and that noise of the market so you can focus strictly on the trend. That's what you're doing. You're focusing strictly on the trend. And so, but understand, while we're going through this, when you see an uptrend or a downtrend of these candles, an uptrend or a downtrend of the Hikinashi candles, if they have a smooth top across the bottom, across the red candles, or the bottom, the green candles, that means that it's an uptrend or it's a downtrend. So what you're looking for is that smoothness, because when we have a typical uptrend, we're seeing all the retracements, we're seeing all the pullbacks, we're seeing the wicks because we see every buy and every sell. But like I just stated, these candles remove that noise. They remove all of that and they focus on the average. They focus on the average. So what you're looking at is the average of that candle moving up in an uptrend or the average of that candle moving down. So that makes the bottom of the candle smooth. So if it's an uptrend, the bottom is smooth. If it's a downtrend, the top is smooth. When you immediately get a wick, when a wick is formed at the top or the bottom, now you're showing a trend reversal. Okay? You're showing a trend reversal. Yes, we're going to see that in just a minute, but that's really the rules. These are the rules. It's just that simple. But this is important. Do not attempt to replace these candles, because if you are just beginning to trade, if you are learning, do not attempt to replace these candles. Do not attempt to replace the candles that you need to analyze the market, that you need for technical analysis, that you need when you're entering and exiting your trades on your MetaTrader 4. Do not attempt to replace candles with the Hikinashi candles. Do not do that. These are strictly for what it is. It's to identify trends. That's it. When we're doing technical analysis, when we're doing market analysis, when we're looking at different strategies, when we're doing anything else, we need the traditional candles that we normally look at. That's why they're the default. Okay. So, but when you're just doing a trend analysis and you want to see a trend and catch some pips, this is definitely a strategy that you can do so. So I'm going to emphasize that. Again, do not attempt to replace the candles with the Hikinashi candles, okay? These analyze market trends. So do not attempt to replace them. I'm going to stress that, okay? I'm going to stress that. So here I can put them side by side. This is the same currency pair, the same time frame. So when you look at these candles, you see the market noise. See, look at the wicks. Look, sell, buy, sell, buy, sell, buy. You see everything, but you see every single movement within the candles. Every single movement. Sell, buy, sell, buy. You see everything with the wicks and everything. But when I look at the Hikinashi candles, right? When I get down to these candles, what I see, hold on. Okay, sorry about that. What I see when I start a sale, what happens? This is the smoothness I was talking about. Look at the top of these candles. You see there's no wick. It's just smooth. So when I switch back, like if I wanted to switch back, you will see green in here. You will see wicks. You will see pullbacks. But what this does is it focuses strictly on the average of what is going on that candle within that time frame. So it's down. What do we see? And I know these are off just a little bit, but what do we see? It's down, correct? But you see all the market noise. This is down, but you don't see, this is a sell. It's down, but you don't see anything. You don't see anything but a sell, smooth tops. Same thing right here. Now look what's happening. I start seeing wicks. What does that mean? It means there's a trend reversal. The wicks mean the trend is turning. So, where am I? And see, I started seeing wicks. So this was not a strong uptrend. So this is not a trade I would have taken, right? Because this was a strong downtrend. So every time I go up a little bit for an uptrend, or you see green candles, they're not strong. But look right here. Across the bottom, I actually had some smoothness. But what happened? As soon as there was a wick form, it began to turn around. And then I got smoothness across the top. There are no wicks on the top of those candles. As soon as, now see, when you're watching these form, you'll see that a wick was formed initially as red, but then it turned around and turned green. But you'll see that wick is formed, and then it begins that trend reversal. So this is what these candles look like. This is what these candles do. So that is what we're looking for. Now, when we trade them, right? We trade them. Now I have a few examples because I told you I've been in the market, okay? And yes, I'm gonna go to another one first because this one did have some wicks because they did call this one. So I doubled in there. Okay. Like I said, this was not a strong up, but as you can see, it went up, but it had wicks, so it was not a strong uptrend. But when it had the wick on the sell, right? It had the wick on the sell, and now across the top, what happened? So this is the web analyzer. These are screenshots of the web analyzer. That's what this is, screenshots of the web analyzer. And this is the currency pair the web analyzer called. When the web analyzer called it, this is a time frame they called it on. And then, so you see the entry was right around that time frame. So this is a time frame they called it on. This is where they called it at. And then 10 pips take profit. And as you can see, I added the stochastic to it, and you see what happened. You add the stochastic to it, it shows that it's also a downtrend. But during that time frame, from where the web analyzer called that trade, I'm in a downtrend. My tops are smooth. I'm in the trade. I got 10 pips real easy. Here we go. Now, and for some reason, when it screenshot, it put the stochastic on top of it. So my apologies. But at the same time, yes, you do want the smoothness. You prefer the smoothness, okay? The smoothness means a strong trend. These did have a few wicks on top, which means that a trend reversal is coming. However, the stochastic also has a strong downtrend. So I added that on the web analyzer. So the stochastic had a strong downtrend. If I would have strictly been looking at these candles, This is not a trade I would have taken. But because of the wicks, like I just told you, what are the rules? I'm looking at where the web analyzer called the trade. Then I'm looking at the wicks. Are my top smooth? It's some strong candles for a downtrend. They're strong, but they have some wicks. So I'm gonna check my stochastic. So my stochastic has a strong downtrend. And like I said, for some reason it doubled up, but you know it's normally at the bottom. So somehow I couldn't get it to move back when I screenshot this picture. But it's normally down at the bottom. But as you can see, it had a strong downtrend. But has the stochastic not had a strong downtrend and it had wicks, I wouldn't have taken it. But because it had a strong downtrend on the stochastic, yes, and the candles were strong, I took the trade. And guess what? 10 pips in profit. Also, here's a buy. So they're always not picture perfect, but you see the stochastic confirms the trade of the trend. So this was actually called, but I did not put the information on there, but this was called prior to that. And I'm going to show you in another slide how the web analyzer sees these trades and they're consistently calling it. And when you change to these candles, you will see the trade. So this one is perfect. It's perfect. These candles across the top, they're smooth. They're very smooth. So the trade was called, 10 pips were made. The stochastic is in a downtrend. And then I turn around and I got a call for an entry. And actually, this is where it turned. And it had a wick, but look at the entry where they called it. So yes, this one did have a wick, but look at the entry where they called it. The web analyzer called this trade at this. It called it at this. This is the candle they called it on, but this is the entry price that they called it at. So I put the line on there because this is the actual entry price, but this is the candle time frame that they called it at. So look how accurate that is for the web analyzer. So like before, sometimes we had to wait, but on this one, it did call it, but once it got to that price that the web analyzer called, guess what? I had a smooth bottom. And what happened? I took profit because this is my take profit line for 10 pips. And I took profit. Now, on this particular trade, they actually called this one a few times. So as you can see, initially it was called and we had a nice strong downtrend. A nice strong, and because I couldn't screenshot the web analyzer, the calls and the candles, what I did is I just wrote on there. So I had a nice strong downtrend, right? Then so we called pips. Then they called it again for a buy, but it wasn't ready. So this is the first time they called it. Like I say, sometimes you have to have patience. You have to wait. So it was in a downtrend, and then they called the same currency pair for a buy. And this is what they called it at. Then they called it again for a buy. And this is when they called it. This is the price they called it at, and this is the time frame. So this is the candle they called it at. Then they turned around, they called it again. And guess what? This actually should have been down because from when they called it, I actually profited off of this trade. So they called it from here. When the candle turned around, this actually is 10 pips. But look what is the stochastic doing? It's confirming the trend. It's confirming the trend. So again, before we pull up the web analyzer, for the cash out, do not attempt to replace the candles with the Hikinashi candles to analyze your market trends and do your technical analysis. These candles strictly identify the trend. They remove the market noise. They remove all of the ups and downs, the noise of the market. They remove the noise of the market in order for you to be able to see the trend. And when you apply that to the web analyzer and the trades that are being called, 10 pips on that 15-minute chart, and you are actually in profit. And this is something where I don't care how long you've been trading, if you're a new trader, if you've been trading for years, it does not matter. You are in and out of the market. So before I pull up the web analyzer, I want to ask, do we have any questions?
Yeah, I have a question for you, Ms. Dyer. Gerald D.
Yes.
Rogers here, Jacksonville. So are you saying with this particular candle, instead of me having to go and draw a trend line, determine how to high to establish 2 points, what you're saying is that this particular candle automatically identifies the trend automatically? Am I to understand that correctly?
Yes, that's absolutely correct.
So I literally can take a look at anything that the web analyzer called, and this candle is designed to automatically show me a trend, and all I have to be able to do is identify my entry point, my stop loss, and take profit.
Correct.
Are you kidding me?
That's why it's the cash out.
Wow. Thank you.
BYOB cash out. It's just that simple. Because if I change these candles, like looking at this currency pair right here, okay? So I have this currency pair up here. Now look at the difference of these candles. So, okay. What do I see? You see all the movement. You see all the movement of the market. You see all the movement, right? I see all the movement. I see everything that's going on. I see everything that's happening in the market. How do I know when to get in, when to get out? How do I know? So that's when all my analysis, that's when everything, that's when I have to come back and do all my analysis. And this is a good one. And I'm actually on the daily, so I need to come down to the 15. So I might stay up there because it's a lot of consult. So, but look at that. So how do I know? I can obviously tell just by looking at it, I have a downtrend, but you see all the noise of the market. So when I actually change the candles, you see the smoothness of the market, of the trend, because it removes the noise. It removes the congestion. It looks at the overall picture of what's happening in that time frame. So just looking at this, if you see the wicks formed from this uptrend, when this wick formed in this candle, I'm now going into a downtrend. Look at the smoothness across the top. Can you all see that? Can you see that where my arrow is, or the lines? So look at the smoothness across the top. And like I said, every now and then, just like you saw because those screenshots were very close and I only showed a few candles. But this is the big picture. Like this is when it's scanned out, zoomed out. So every now and then you will see a wick, but when you start seeing that wick, you know it's about to turn. You know that trend is not as strong anymore. And so when it turns, that identifies a change of the trend. It's about to change, or it's changing or about to change, like very fast. So then I turn around and I'm in an uptrend. right? So you see, initially it has a wick, but then look across the bottom, it's smooth. And then when I get that wick right here, I'm gonna change this to an arrow. When I get this wick right here, my trend change. But because I have wicks, I know I'm in a downtrend. My candles are strong. I'm in a downtrend, but it's not a strong downtrend because I have wicks. So you see how short that was? Look at the wicks. Because I have wicks, it's not a strong downtrend. And guess what happened? It was very short and it turned around. And then look, I had a long wick, so it turned around quickly, and now I'm back in another downtrend. I got a wick, it turned around, because if you watch this, you'll see that this started out red, but then it might have turned green. And then of course it's smooth across the bottom. It's smooth across the bottom, so I'm in an uptrend. And then I get a wick and it turns around. Just that simple. Any questions before we look at some of the pairs that were called? Questions, comments? Okay. So we'll pull one. And I'm going to show you, well, first and foremost, I'm going to start with what I'm doing and how I'm doing it. Because this is going to be very important, because like I said, it's not programmed into the web analyzer. So what you have to do is strategy, okay? You have to, once you get to the web analyzer, you have to come down here to where it says strategy. Oops, let me do that. Hold on. You have to come down here to where it says strategy. And my strategy that I select, and hold on. The strategy that I select is ATM, because that's to me, what I found, as you can see, what's on that chart, nothing. So that's the strategy that I select. Now, if you have a mobile Safari, you have to save it. I'm on a Mac, so I'm on Safari. Have to save it for mobile Safari, and then you have to save your settings. Okay. Now, every time you select, because once again, it's not loaded in the web analyzer. Okay. So you literally have to move to the top where it says bar style, and you're going to have to select the Hikinashi candles. Okay. You have to select them. Okay. And then, okay, they're still there. Then right here where it says indicators, and this is where I was talking about, it's going to take a little work. I add the stochastic, but I add the stochastic because it helps make sure I help you identify your trend. Okay. And so now I can work with when the web analyzer called a trade. But as you can see, they haven't called anything on the 15-minute chart in a while. But you notice they call trades all the time. And yes, you can take trades on the other time frames. If you're on the 5-minute chart, I wouldn't do more than 5 pips. If you're on an hour, I would definitely look at it, because as I just told you, I started trading this at the end of last week, but I have been in and out of the 15-minute chart, and I have literally been in profit on every trade that I have taken. Every trade that I have taken, I have been in profit. Every single one. But I have definitely been on this 15-minute chart. Most of the trades that I've taken have been on the 15-minute chart. So we're talking about it tonight because I definitely want to make sure you're in profit as well. And what I'm sharing with you is what I've done. And so because where the market is right now, if you look at where this was called, I'm gonna grab my horizontal line. 157,910, just to kind of show you what I've been doing. Okay, and as you see where it dropped, but I'm gonna show you a little trick. When you come on this tool, you hit settings. I can go to my coordinates and I can just type it in there, 157,910, and it'll show you exactly where it was at. I can be exact on my coordinates. Grab my arrow, and it was called at 2230. So that's the candle it was called at. Now, they call for a potential sell. So as I stated, sometimes you have to wait. Just because they called it at that time does not mean the trade is ready. Because as you can see, this one is still in an up position. So right now, this is where they called the trade, but the market was in consolidation. We're not trading consolidation. We're not trading anything. These are the Hikinashi candles. So all we're doing is looking for the trend. And I'm going to keep stressing that. We're looking for the trend. We're trading the trend. So based on, yes, they called this for a sale, but based on what we know what are my rules? Because it's going to come for a sale. It's going to come back to this point because that's what it scans the market. It definitely scans the market. So you can wait, you can keep checking this trade. But right now, when this happened and you saw this and you saw the stochastic lined up, you could have took this trade. It's moved across the bottom. When it started moving, guess what? Now I'm telling you 10 pips, right? But let's say you would have got in on the second candle when you saw it because we're following the rules. That's 30 some candles, almost 40 candles. 40 pips on those candles. But when you setting your take profit, we're talking about 10
Question.
pips. Yes.
Question. So on that 1590, and following the rules that if it's a smooth bottom, I can enter at that entry point, and because this candle is also identifying the trend, I could have, and this is a 15-minute candle time frame.
Yes.
And that would have been 40 pips just because those four candles have a smooth bottom.
Yes.
So
confirm with the stochastic. Yes, smooth bottom because it removes the market noise. And the smooth bottom is because when they do the analysis and the average, because it's averaging everything that's happening in that time frame. So when all of that happens, it's a uptrend. So that's why the bottom is smooth, because the strength of the market at that time is an uptrend.
Gotcha.
So yes, but what we know for a fact is the web analyzer causes for a sell. So sometime tonight, around this line, it's going to be selling. Because if you notice on all those screenshots that I took, they were when that web analyzer called that trade. But as you can see right now, currently, we're having patience on waiting for this to turn around. But guess what? This is definitely it's definitely a strong uptrend right now, waiting on the market to come back around. So while we're doing this, because we know the rules, we can take this trade. And that's why I added the stochastic, because it confirms the uptrend as well. So that's two confirmations that you have an uptrend. If I come back over here, look at the smooth bottoms on this sell. Look at the smooth bottom on these candles. The smooth top. Now, look at the stochastic as well. So that's two confirmations that you have. But that smoothness means it's a strong trend. So like, even though this is going down, it's not, it's weak. Look at the difference, and they have the wicks on them. So just look at the difference. It's a difference. And so as you can see, we know it's going to come back down. Like if I wanted to look at what the web analyzer is calling, I'm like, why is the web analyzer calling that? And I have a strong uptrend right now. I mean, we're obviously in a down. We obviously have a strong downtrend. So this is pulling back. And that's why I said, normally if I switch these candles back, you know, you just had a strong candle that went up, but we probably wouldn't have took this trade. You know, we probably wouldn't have taken that, because look at the difference. Look at the noise of the market. Look at how these candles look. But when I changed to Hikinashi candles, it removed all that noise. And so now I know that this was a strong trend. I'm still in a strong, that strong trend, and I can just, because of that, even though I'm in a downtrending market, this is a strong retracement, a strong trend up, and I can grab some pips because we're scalping. Any questions before we move to another one? Questions, comments? So, as I stated, every time you change, because it's not programmed into the web analyzer, I'm back on my default candles. Let's come up here, click my Hikinashi candles. See the difference? Look at that. Look at the noise of the market. We need the noise and I'm gonna stress that, we need the noise to do market analysis. We need the noise to understand the technical analysis. We need the noise to understand the trends of the market, the big picture. We need the noise. So, however, what we're looking at right now is we're scalping the trend. We're looking at the trend. We're catching pips on the trend. So because of that, I can just change to my Hikinashi candles, right? And look at the difference to how smooth that looks. Look at the difference. Go add my stochastic. Now, this was called at 1.12680. Grab my line. Confirm its accuracy. Right? Now, grab my arrow. That's when it was called, 2145, and it called for a buy. So when I got the notification from the web analyzer, right, this is where we were at. So look at the candles. Look at the smoothness across the bottom. Look at the stochastic. Two confirmations. You know, I like confirmations, so I'm typically using, so two confirmations. And then when it got to the top, Now, of course, I'm going to set my take profit for 10 pips. But if I'm watching it, you know, you can possibly get more than that. But take profit is about 10 pips. So this one actually, from when the web analyzer actually called it, it was like 9.5. Let me see. Or if we would have got in it exactly when they called it. Let me pull this thing. Would have got in it right when they called it. We would have hit directly on 10. 10.1 from exactly when they called it. So as you can see, this is, you're going to get about 10 pips on every single trade that they called. Because I'm telling you, every trade that I've taken, and it's about 10, I've gotten about 10 pips or more on every single trade that they've taken. But one thing that you look at and one thing that you notice, if I'm going to put my cross back up, what started happening? That stochastic started crossing, right? That stochastic started turning. But I also got a candle with a wick. So I know that it's turning. I know that it's changing. So right then, that's why I say don't get greedy on trading. Don't get greedy. So we're on a 15-minute chart. On a 15-minute chart, you're looking at about 10 pips on a 15-minute chart. So yes, on other time frames, on higher time frames, of course, you're probably looking at getting more. But on a 15-minute chart, you're really not trying to go for more than 10. Like we just saw that we got more than 10 on the last trade. But if I'm setting it, I'm setting my take profit for 10 pips. But if there's opportunity for me to get more, that's only because I'm sitting there watching it. And then, of course, I'm going to move my stop loss up. So I'm not going to just go for more than 10 pips just because. But I'm going to set it for 10 pips.
Now, let me ask you a question based on the rules.
Mm-hmm.
On that, where the candle, the wick was established, and then it's smooth, and it turned into a quick downtrend where the stochastic crossed over and it's showing a downtrend. So I could have came into that buy and then went right back into a sell.
Absolutely.
And what would have had that have been on the sell after coming out of that buy?
$15. But if you would have just set it for 10, like if you would have just took a take profit, it would have been, you definitely would have got your 10, but you could have gotten about 15 pips.
So that's understanding this particular strategy and this rule based on that 15-minute, so that basically in that time frame, so we're talking about 30 minutes going up and down, we could have had gained about 20 pips.
Mm-hmm. Exactly. Absolutely. And so, I mean, you can literally watch a currency pair. I mean, just look at it, just like what you're talking about, right? So just, even if I just stayed on this, right, a currency pair, because like, look at this, the web analyzer is on a 15-minute chart. It's been 3 hours, but normally you get on here, you get on the web analyzer sometimes and they're calling trades every 10 to 15 minutes, right? But like right now it's 3 hours. But I mean, look at this. I can take this. I could have went this and got 17 pips. Turn around. Got another 14. Turn around. Got another 13. I could have just, I mean, like, based on the rules, looking at these wicks, might not have took that one. And I could turn around and got some more pips. You see how each one you're getting at least 10 pips. And then I turn around because the wick changed. Turn around, 17. Turn around. And I mean, and then of course we went into consolidation. We're not trading consolidation. And because this is trend. The trend is up, the trend is down. With this, we are not trading consolidation. And I'm headed down, another 10. I'm not trading this area right here because look at the wicks. And I mean, if I come down and I look at the stochastic, it's a little choppy too. But then what happens? So you can literally ride this out based on what you just said, Mr. Rogers. Look at that, 43 pips. $22. So you can ride that out. That's why it's called the cash out. So no reason why you don't have an ATM machine. There's no reason why you are not your own bank, your personal ATM machine. Riding the cash out wave. Time is money. Yep, your time is money. Exactly. Riding the cash out wave. BYOB cash out. Any questions? We have about 5 more minutes before we have to transition this call. Question, comment.
So whoever has your hand up, if you have a question, if you can unmute yourself and go ahead and ask a question
Okay, I'm sorry. I apologize. Hi, this is Tatiana Benson from Tampa. And I just wanted to know, my question is for Ms. Dyer. Everything that you are showing us tonight, is that what is learned with the IML Academy? Like, how do you know how to go and put the coordinates and, so easily? I'm just trying to gauge the expectation, for what's ahead, basically.
That is a wonderful question. And honestly, the IML Academy is definitely what has helped me get to this point. Because yes, I'm a financial advisor, like Mr. Rogers said. So, however, that does not teach you trading. So I knew of the foreign exchange market, but I didn't know how to trade the market. And this academy, IML Academy, is definitely, I dove into the academy. I started with my training, and that training literally takes you from pre-K to postgraduate. I mean, the video start with what is Forex. So it definitely starts from the very, very beginning. And so all the analysis, the analytics of the market, understanding trends, understanding everything that we're discussing is definitely things that I learned in the academy. And then over time, as you begin to navigate through the market, your skill set gets better and better and better. But that is how the wonderfulness and how great the tools are. Because just like you being, if you're new or you're getting started, the tools actually put you in profit. So we were able to utilize the tools like we still utilize the tools, and they put you in profit while you're learning.
Oh,
so
really?
while you're beginning, yes. So while you're beginning to understand big market picture and big market structure and understanding the market itself, these tools put you in profit.
Okay, no wonder you're gliding through it so easy. Okay.
Exactly.
Thank you very much. I appreciate your response.
Oh, you're very welcome. Thank you for your question.
You're welcome.
And if you've been on the Talk with the Finance Doctor before, I'm going to take one of his quotes, the unmuted mic, because that is definitely something he says. So get your questions answered, because the unmuted mic is how you get the information. So do we have any more questions before we transition this call?
Hey, Tasha, this is Cece.
Hey, Cece.
came in a little late, so I didn't catch everything, but I know the video will be posted. Have you did this on a 5-minute? Because I'm real familiar with the Hakanashi, or however you call it, candle, because I actually use that one. That is more accurate for me. So I've been started using that one months ago.
Oh, go see.
Yeah, but have you ever done that with a 5-minute chart? And then did I hear you clearly that you can do this with the hour or, a higher time frame, to get more pips? Or do
What
you recommend only starting off at the 15 minutes,
I recommend starting out at the 15, honestly.
Mm-hmm.
The market moves a lot more, of course, at the 5 minutes. But so I recommend the 15. What I do is when I have the 5-minute up, I use that as an indicator of what's coming. So just, you see, I took off the 15. Okay, we just got some called for 6 minutes ago. So they just started calling some trades. But before it was 3 hours. So the 5-minute, is giving you indications of what's coming. And so I've always used the 5-minute chart for that. I've never really traded the 5-minute chart. So that's why I was saying, if you're using a 5-minute, I would definitely not try to get more than 5 pips, because that's serious scalping. So I personally use a 5-minute for just looking at what's to come, knowing that something is definitely coming, kind of giving me indications of what they're going to call or the direction that the market is going. So that's what I use that for. Now, the higher time frames I've been looking at, but to get, I can tell you, I know you can get 10 pips on a 15-minute chart. The only thing I can't tell you right now is your pip count on the hour chart. So I'm still testing that. But I definitely know the 15-minute chart. Now, have you traded the higher time frames?
I have traded the higher time frames. I'm more, the higher time frames kind of work better for me. I've learned, my schedule, my timing, what be more beneficial for me. And I have gotten more aggressive with my trading. So I do get higher pips than the 10 pips. But again, like I said, I came in the middle of this. I didn't catch the beginning.
Okay.
Liking the name ATM, so I'm going to be practicing right on that tonight. So, but that's what I was asking.
Okay, most definitely. And just to reiterate, because you say you came in, I'm using the ATM strategy, but you have to physically change the candles and add the stochastic. Just so you know.
Okay.
And so I heard someone else.
Yeah, this is Gerald again. And folks, for our guests, our new business partners, we wanted to make sure that we introduce this to you this evening, to as you're learning, as you're becoming, more astute. Even as Cece just spoken, she's been with us for a minute, so she's able to really analyze the charts. But we wanted to be able to remove all the noise so that you can, as you're diving into the IML Academy, you're able to immediately identify uptrend, downtrend based on those rules that we've shared with you this evening, and put you in a position of profit. And ideally, if you follow the rules that we've laid out, you should be in a position where you're in profit, whether you're demoing or in your live account within your first 21 days. And that's the purpose of simplifying and giving you this strategy, the BYOB cash out. So once again, the onus is on you. If you are in the academy, this is how you immediately find yourself in profit. Identify the candle. It's simple, it's smooth, because these candles, the Hakanashi Ashi candles, are designed to help you understand the trend. So as you become more astute at drawing your own trend lines, this kind of eliminates that step for you, and now it makes it simple and easy for you to dive in and become profitable as quickly as you avail yourself to dive into the IML Academy.
Thank you so very much. And ladies and gentlemen, this call, we are going to officially transition this call. So I want to thank you, Mr. Rogers. But you definitely want to